Let's shift our focus to KEI Industries. My colleague Anushi spoke to Chairman and Managing Director Anil Gupta, who spoke at length about the company's growth prospects ahead. Listen in to a chunk of that conversation.
The capex at Chinpada is now complete, and we have already. It was a brownfield expansion. That means the expansion within the ongoing factory, and we have already started production from the additional capacities created over there from July onwards. Regarding Sanand, the construction work is in full swing, and we expect the first phase of the project to be completed by either end of the March or in the first quarter of FY26. So far as capex is concerned, this year we expect to do a overall capex of around 700 to 750 crore rupees in all our plants, where the major will be the Sanand.
Okay, Mr. Gupta, and considering the additional capacity coming in, what is the revenue projection that we are making? Is it going to be in the similar range of 16 to 17%? And also on the volume front as well, if you can give us a guidance that we can look forward beyond FY26. So if you can take the next 5 years in consideration.
This year we expect to grow by 16 to 17% because this incremental growth will come from the brownfield expansions, which we have done in last year and this year at Silvassa and Bhiwadi and Pathredi. So far as Sanand is concerned, that contribution will come only in the next financial year. So we expect that with this expansion in Sanand and existing expansions, we should continue to grow by 16 to 17% over next 4 years. And in between, maybe next year or so, we'll plan something else for the future years.
Okay, so 16 to 17% of revenue growth that we should be expecting for the next 4 years. All right, that's fair. Now, if I'm looking at your mix in the main cable and wire, which is your heavyweight segments, the focus has shifted towards the dealer side. The mix is now inched upwards from 47% last year to 53, almost at 53% compared to the institutional side, which has gone down. Want to understanding your perspective on this. What is the positioning that you are looking towards? Should we expect a similar level for the new quarters to come as by? And what is the margin profile? How do the margins profile differ across these two segments?
We expect to maintain around 50% from B2C and 50% from B2B in the coming quarters. And so far as margins are concerned, I think the margin profiles almost remain similar.
Okay, so margin profiles remain similar, and that is in the 10 to 11% that we should be aiming for FY25 onwards. But beyond that, you have guided that we can expect some sort of improvement. So can you talk more on that sense as well?
Yeah, we can. We expect to maintain a EBITDA of around 11% in this financial year, and maybe we are definitely trying to improve upon EBITDA by 0.5% to 1%. I mean, by improving the customer profile and also by achieving better economies of scale and better efficiencies in all our plants. So that this will be the aim, and we'll try to achieve better than 11%.
Okay, that's fair. Mr. Gupta, now coming to the other leg of the business is on the export side. Now in Q1, we did see about a 24% of a dip that was on the account of logistic issues. Want to understand what happened in the quarter gone by, and in the next quarter, what can we expect? Because there was a shortfall revenue which you're expecting to make towards Q2 and Q3. So wanted to understand more on the export side of the business.
In this financial year, overall, for the full year, we expect to grow by around 35 to 40% in exports. We had already explained the reasons of dip in the first quarter, but that will be made up in this quarter. So, but overall, full year looks promising because we have a very strong order book position, and we are also improving our, customer penetration in many countries
Okay, so
overseas.
35 to 40% is the growth level for this year that we should be looking out for.
Correct.
Okay, and now coming to your order book, now if we compare the order book, now that has stood at about 3,600 crores. Want to get your perspective on what were the new order inflows which are taking place, where are we seeing more opportunities, and what is the kind of pipeline that you're looking towards for this financial year?
Um, we have very strong order booking of recurring nature of cables supplies, which we normally execute within 3 to 4 months. That is B2B. And so far as B2C orders are concerned, they are mostly executed within maximum 2 to 3 weeks, partly from the inventories or stocks we are holding, or by quickly manufacturing it. So we are not including B2C orders in our order book position. And the order book position mainly consists of the B2B orders and also some EPC and EHV cable orders.
Okay, so a higher mix of B2B orders that we are looking forward as of now. Now, there was a very interesting progress report which suggested that your branded housing, wires and cable business is set for more room for market share expansion. I wanted to take in your perspective. Do you agree with this statement? Because if we look at your cable and overall cable and wire market share, that stands at about 12%. And if you come to the branded part, about 7 to 8%. So what is your outlook on this? Where can we see these numbers going upwards towards in the next 2-3 years as we move forward with the business?
See, this market size is growing, and we are improving our market penetration by tapping in untapped areas where our dealers are not present, or where our market is not there. So we are improving our penetration, and we hope that with the increase in the market size and our penetration in the untapped markets, we should be able to grow by around 25% per year in the branded house wire segments, and thereby taking it to a substantially improved levels in next 3 years.
Okay, so 25% is the growth that we maintain for the branded housing, wire and cable business. Now, this is one offhand question. Now, a lot of wiring companies are now involved in E-beam cables. Now, since you're involved in exporting cables for the solar projects and wind projects, wanted to understand, are you also involved in these works, or you're planning to launch in a similar level? Wanted your perspective on the same.
We are manufacturing equivalent variety of solar wires, but by continuous vulcanization rubber process. However, we are also coming up and launching electron beam cables in our new Sanand project, for which the construction work is under progress, and we have already ordered the plant and machinery for electron beam wires in that facility.
All right, so plenty happening. In fact, both the stocks we've spoken about today are very, very interesting. But with that, completely out of time on this edition of the Smidge Show. From myself, Mahima, and everyone who puts the show together, thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.